Investment company. Investment companies are business entities, both privately and publicly owned, that manage, sell, and market funds to the public. The main business of investment company is to hold and manage securities for investment purposes, but they typically offer investor a variety of funds and investment services, which include portfolio management, record keeping, custodial, legal, accounting, and tax management services. For example, assume an investment company pulled and invested $10 million from a number of clients who represent the fund company's shareholders. A client who contribute $1 million will have a vested interest of 10% in the company, which would also translate into any losses or profits earned. Investment companies are categorized into three types: closed-end funds, mutual funds, and unit investment trusts. Each of these three investment companies must register under the Securities Act of 1933 and the Investment Company Act of 1940. Closed-end funds and open-end funds. A closed-end fund or closed-ended fund is a collective investment model based on issuing a fixed number of shares which are not redeemable from the fund. Unlike open-end funds, new shares in closed-end fund are not created by managers to meet demand from investors. Next is the Unit Investment Trust. A unit investment trust is an investment company that offers a fixed portfolio, generally stock and bonds, as a redeemable units to investor for a specific period of time. It is designed to provide capital appreciation and or dividend income. Requirements of registration and licensing. Any investment company that may be organized under the laws of the Philippines will have to contend with the provision and procedure laid down in Section 7 of RA number 2629, otherwise known as Investment Company Act. Every investment company shall file with the Commission an original and such copies of registration statement in such form and containing such of the following information and documents as the Commission shall, by rules and regulations, prescribe as necessary or appropriate in the public interest or for the protection of investors. Next is the business of investment companies. An investment company is a corporation or trust engaged in the business of investing the pooled capital of investor in financial securities. This is most often done either through a closed-end fund or an open-end fund. Transaction by investment companies. No investment company organized or otherwise created under the laws of the Philippines and having a board of directors, unless registered under Section 7, shall directly or indirectly. Investment companies make profits by buying and selling shares, property, bonds, cash, other funds, and other assets. Next is prohibited activities of investment companies. Investment companies are business entities, both privately and publicly owned, that manage, sell, and market funds to the public. Financial advisors are entrusted with helping clients invest their hard-earned income. Many investors are counting on these funds to pay for a child's educational expenses and to provide income during retirement. Investors entrust financial advisors to act in their best interest in important matters such as saving for a home purchase, retirement, or a child's educational expenses. Precondition for a public offering of securities. An important challenge for all economies, at which only a few have succeeded, is creating the precondition for a strong market for common stock and other securities. A strong securities market rests on a complex network of legal and market institutions that ensure that minority shareholders receive good information about the value of a company's business and have confidence that company's manager and controlling shareholders won't cheat them out of most or of the value of their investment. Board of Directors of Investment Company. To build a successful venture, CEOs and other management involved in forming a company need to know it takes teamwork and good communications. The board of directors in a company are responsible for its ultimate success or demise. Unfortunately, a board of directors may collaborate together, but each are individually accountable for anything that goes wrong. Duties. In other words, those who lead departments who are responsible for daily running of the business and its employees. Shareholders. The board of directors work on behalf of the company shareholders, making overall decision in policies as well as providing oversight. Corporate bylaws. Directors forming a company have a great power as well as great responsibility. Corporate bylaws are responsible for setting specific duties of the directors, committees, individual board members, and officers. Primary duties of directors: fiduciary responsibility. A board of directors have a fiduciary responsibility in caring for the legal requirements and finances of the corporation. Therefore, they have to act in good faith and with a very reasonable degree of care. The company's interests have to take precedence over any of the board members' personal interests. Vision and mission. The board of directors in a company are solely responsible for setting the company's vision and mission, as they ensure that all action being performed adhere to and are related to that mission. The directors may also change the vision or mission as needed. All large companies have vision and mission statements, and both are the very first thing directors forming a company tend to work on. Next is oversight. A board of directors in a corporation do not participate in daily decision making. They instead delegate to lower management and focus on the big picture. They are also involved in oversight functions, as they regularly review the actions of corporate executives and officers. Next is annual meeting. At the corporation's annual meeting, the directors do announce the annual dividend, amend corporate bylaws, oversee the election of new board members, and appoint key executives and officers. Lastly is the liability. Directors in most cases do have a fair bit of latitude in duties they perform as the company board members. They must always be free to act in the best interest of the company shareholders, running the corporation as best as they can to maintain profits and maintain the company image.